Good morning, good evening, good afternoon, depending on where you are in this world. This is Edge and Lee with an update for Ethereum. There are days when I'm not updating Ethereum because there's very little change. And if there is no update on any particular day, it's pretty much the same as what it would have been on the analysis side from the prior days. So we left off with this, that we have an ABC. And notice how this B right here is just slightly above the bottom of the C. That does happen. Such hairline by the skin of the teeth type of differentiations do happen. So if we have A, B, C, and then we have 1, 2, 3, 4, 5, this could reach towards maybe 200. 190, 180s. And as I stated yesterday, we're looking for the 5-wave impulse of the white 5 of the blue C to complete. Then we'll get a sizable decline. Plus or minus 3 days from the 21st of January, maybe even earlier than that. But I do see a pattern that I want to share with you. And that pattern is a pointy wedge. When a wedge pattern is pointing upwards, it's bearish. And the wedge pattern is defined by a pair of contracting lines. So this purple line shows that this ABC is about to come to an end. Now bear in mind this is a logarithmic, I'm sorry, semi-log chart. Semi-log because the price is in logarithmic format and the time is still in linear format. So if you can see this, and we put back the Elliott waves like this, the pattern and the Elliott waves seem to jive quite well. This is why 20 years ago, well actually maybe 17 years ago, 18, I started combining Elliott waves with chart pattern recognitions. Because so often they can complement each other. Or one can provide resolution while the other is not. In this case, if this wedge pattern is to complete, it'll likely reach towards somewhere around this region. And one particular aspect and attribute about wedges, once it breaks down, they 70% of the time exceed the point of origination. So for the swing traders out there, if I were a swing trader, what I would do, I would start taking profits at anything above 170s, ladder out. And if you didn't finish an laddering out and price breaks the lower purple line trend, sell. And actually maybe even consider going non-leveraged short on BitMEX. I don't use leverage. If you want to lose leverage, you're more than welcome to. But using leverage on BitMEX is very dangerous. You can easily get wrecked. So if I use non-leveraged short, it can still be highly profitable. By doing it, if I was a swing trader, with tight stops. So if I had gone short, it broke down, gone short here, I would have made the prior high my stop. Maybe a little above that. I hope you find this helpful. Have a great day.